And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 future, the ES, on Thursday, April 22nd, 2021. What an afternoon we had today. To update the count, we were looking for a B wave to carry us up a little bit higher than it did, although we had basically put in place that the market had reached a 0.705 level yesterday and then went up a little bit higher today. So it fulfilled pretty cleanly the count that we were using in terms of this B wave. And what it has done, it set the stage for the beginning of a C wave. And those that have kind of been listening to me for a little bit of time have heard me discuss with relationship to the NQ, what a B wave and a C wave can really look like within a corrective structure. B waves can be deceiving in that they'll race up in the direction that is counter trend. In this case, it was up, and make you believe that we're just going to the moon all over again. And that's pretty much what happened. We had some very strong up days. In fact, this morning we had some pretty strong, like, get out of my way, we're buying. And then at about 11 Pacific time, 2 o'clock Eastern, President Biden made a remark that he was looking to increase the tax rate for the wealthy. That was like opening the exit and shouting fire in the theater. Everybody ran for the doors and the markets kind of just plunged. But if you remember, I have discussed that C waves can be unforgiving, can be extremely fast, can be news driven, and will just kind of, you'll be shocked at the speed in which something can move. And in this case, going down, and that's exactly what happened. It just went. Now, what does that portend for us for tomorrow? I still am now pretty confident this is wave A, but now I'm going to put a B up here. I didn't do it yet, to indicate that we're now in a C wave down. And within that C wave down, we may only have done wave 1. And this is just a wave 2 correction. So let me take this down even further to see if we have any internals. Not really. This kind of just went ba-boom. Now it did kind of, yeah, it just kind of dropped. So this might be wave 2. And if that's the case, let me go back up to that 30. The S&P has got some hurting yet to do. And what it's really making reference to, it's like, if this is correct, if this is going to be wave 1, and I really need to go in and check, because in the NASDAQ, I'm feeling that we've already seen 1, 2, and 3, but that could be all of that first wave 1 for the NASDAQ. So we could be in for a real twist and some downside coming up. But the way I'm really viewing this is that it is a C wave, and C waves are related to wave A, and here we have wave A. So what does that tell us? First of all, for wave C, it's going to have to break. It's going to move to a new low below what we saw right there, which is 4,171. Actually, it should have been here. No, that's correct. So that is 4,110.50. That's that low. And it needs to break that low. So the first stop under that is that wave C would be equal to wave A at 4,098. Could it end there? Absolutely. And fit and be complete. But the wave structure, that the way this looks right now, it looks like that's not going to contain it. That's not going to stop it. In fact, it's like, if this is wave 1, we're looking for 5. Wave 1, wave 2, wave 3, wave 4, wave 5. We're looking for 5. And if I pull this out to a much longer term chart, you're going to see that let's look it out real quick. The Fibonacci initially for this wave 4 correction, this intermediate wave 4 correction really begins all the way down here at 3,885. And most common would be down here at 3,700. Now, with the earnings and with the hype that's coming in, the bulls, and this rush to get in has really been misleading, could be, in terms of the depth of this correction. Now, I'm not there yet where I'm looking for here, but we're going to pay very close attention as we start to come off in these waves to see if this is actually wave 1 and we get a 2, maybe brings us back up to here or puts in a new high just above that, maybe, then we drop again in the 3. I'm going to be looking for it to come down into these levels before all is said and done. And that would mean 4,098 might just be a pause and an acknowledgement of its level, but the market continues to drop. And so we've got to start looking at these other levels. Now, 1.618, C can be 1.618 of A, not an uncommon relationship. So that's what we're looking at. So actually these 1.382, 1.618, those are pretty common. And that takes us down to 4,070, down to 4,053, we'll call it. And it could go below. So we may have to put some further extensions on here to get the depth of what's coming on so that we're looking at something that's going to match up with that initial 0.236 and 382 on that larger chart, longer term chart. But right now, for tomorrow, I'm looking for continued downside. I believe upside will be limited. The news needs to filter through. This was just the beginning. Maybe they didn't have enough time for everybody to kind of come in and make their adjustments to the positions, to whatever it is that they want to do as it relates to that news. Plus, we're still in earnings. So we have a lot of things churning around, and that's going to produce a very interesting market. These are very tradable, and you can't be in the wrong position. Please remember, if you're trading and you're trading the future, they go fast. They go fast on news. And this was a news-driven move. And so you've got to be working with stops, because if you were long, looking for additional upside, without a stop, you could have gotten wiped out. Because first of all, you're just standing there looking because it's like, oh my God, what's going on? And then maybe you put your stop in. But if your stop's already in place, then you're out. And then you get to see what the hey, what's going on. Because when I looked over my news, I didn't see anything that talked about Biden making the statement. That came out later. So somebody heard it somewhere, and likely on CNBC or on one of the other news channels. Nonetheless, work with the stop, work with your Elliott, work with your moving averages. Trading is there, and it's going to be fast, I believe. And so we're going to be looking for lower levels tomorrow. Rallies will be limited. I think the downside continues unless we start breaking higher, and I mean breaking higher. The alternative here is that they take it all back. They take it all back. So we'll see. But for right now, downside. And that's it for today. Next update will be on Sunday evening.